Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 21, titled US Budget, Renewable Energy Winners and More, for December 20th, 2019, presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Now, as I mentioned in my last podcast, I have a terrific holiday offer for you. It's 50% off the price of my one-of-a-kind investor educational tutorial for all, my DIY Ethical Sustainable Investing Pays tutorial. Learn in 1 hour how to create an ethical, sustainable investment portfolio with ultra low costs. No financial knowledge needed. Money back guarantee. The tutorial is reduced temporarily from $49.95 to just US $24.95 as a special for the holidays. So take advantage of it now by going to my site investingforthesoul.com/podcasts and click the link halfway down the right-hand column. Enroll now while the price lasts. Now to this episode. Remember that you can find a full transcript, live links to content, and often bonus material to these podcasts at the episode's podcast page located at investingforthesoul.com/podcasts. And Google any terms that are unfamiliar to you. First, a note about the recent US budget renewable energy winners and losers. It provides for another year the continuation of tax credits for wind power, but not for solar. It certainly isn't positive for US-based solar power companies. However, from a global perspective, and even for the US, solar power will continue to make headway. Writing about how the new US budget affects renewable energy producers is Max Chatsko of the Motley Fool. He says in an article titled, "Two Renewable Energy Winners and Two Losers in the Latest Federal Budget," and I quote that, "The production tax credit extension could provide a lift to power generators and electric utilities such as Xcel Energy, which has 2,022 megawatts of wind power capacity coming online in 2020 and 2021. End quote. A second winner of the budget deal, Mr. Chatsko feels, is the Renewable Energy Group. He writes that it's the nation's largest biodiesel producer. The business estimates that it will receive a $450 million windfall from renewable fuel production from the start of 2018 through the third quarter of 2019. If production volumes continue to increase in the near future, then the 3-year extension could result in an additional $1 billion in total tax credits for the company." End quote. Mr. Chatsko says the losers from the budget are small-scale solar power companies like Solar Edge Technologies and electric vehicle producers such as Tesla and General Motors. For more details, read his article. Also, in light of the US budget deal, consider what Ben Hernandez says about 3 alternative power ETFs in an article titled "Investors Shouldn't Forget to Power Portfolios with Alternative Energy." He writes that, quote, "One ETF to look at is the Global X Lithium and Battery Tech ETF. It's nearly 9 years old and tracks the selective Global Lithium Index, one of the oldest thematic ETFs. Global X Lithium and Battery Tech ETF is designed to provide exposure to the full lithium cycle, from mining and refining the metal through battery production. That's according to Global X." End quote. The second ETF Mr. Hernandez suggests tracks global wind power companies. He states that investors who want to capitalize on increasing reliance on wind as an alternative energy resource can look at the First Trust Global Wind Energy ETF. The fund seeks investment results that correspond generally to the price and yield of an equity index called the ISE Clean Edge Global Wind Energy Index, which provides a benchmark for investors interested in tracking public companies throughout the world that are active in the wind energy industry. End quote. Then for a third choice, he writes that for investors looking for more broad-based exposure to alternative energy can give the SPDR, that's SPDR, Kensho Clean Power ETF a look. It seeks to provide investment results that correspond generally to the total return performance of the S&P Kensho Clean Power Index, which is designed to capture companies whose products and services are driving innovation behind clean power. End quote. Continuing on the subject of ethical and sustainable investing robo-advisors from previous episodes, Barbara Freeberg wrote on the US News site her latest recommendations. They're in a post titled 7 Apps for Socially Responsible Investing. Her top apps are M1 Finance, Access Invest, Ellevest, Open Invest, Sophie Invest, Personal Capital, and Betterment. These include several she hadn't mentioned before, which are Axos, Ellevest, Open Invest, Sophie Invest, and Personal Capital. Go to her article to see her reviews. Now, for many of you who do your own company research, you probably wonder if the ESG scores you see are similar among the top ESG ratings firms. Well, a study by MIT Sloan School of Management says only rarely. The study was discussed in a Bloomberg piece by Jacqueline Poe titled "Conflicting ESG Ratings Are Confusing Sustainable Investors." The research included company ESG raters Asset4, KLD, Rebecca Sam, Sustainalytics, and Vigeo Eiris. However, another major rater, MSCI, was not included. I just mentioned that MSCI's company ESG ratings were missing from the MIT study. However, coincidentally, the US publication Investors Business Daily has recently published an article titled 50 Best ESG Companies, a list of today's top stocks for environmental, social, and governance values, all based on MSCI data. Investors Business Daily, or IBD, to abbreviate it, also has its own ratings that are applied on top of the MSCI scores. To understand IBD's ratings, go to Scott Litonen's post titled "How to Find and Buy the Top ESG Stocks in the Current Stock Market Rally" on the IBD site. Now, do you need to park some cash in a money market fund, but would prefer one that's ESG based? Well, the following fund might be for you. PIMCO a leading US bond firm, has recently launched a new type of money market fund. It's called PIMCO Enhanced Short Maturity Active ESG ETF. Writing on etfdb.com in a post titled PIMCO Releases Active ESG ETF, Aaron Newworth says it, quote, aims to offer higher income than traditional cash investments with a modest increase in risk, and focuses on issuers with high-quality environmental, social, and governance practices. End quote. Finally, an innovative religious values fund that's really breaking new ground. It's the Catholic Investor Long-Short Equity Fund. Quoting from a press release, quote, the Catholic Investor Long-Short Equity Fund is the only Catholic long-short mutual fund in the world, aimed at satisfying the needs of investors who appreciate ethical values-based investing. The fund adheres to the investing principles outlined by the United States Conference of Catholic Bishops. End quote. Note, though, that as a mutual fund, it's probably only available to US investors. Don't forget, you can Google any terms that might be unfamiliar to you. Well, these are my top news stories and tips for ethical and sustainable investors over the past 2 weeks. Again, to get all the links or to read the transcript of this podcast and sometimes get additional information too, please go to investingforthesoul.com/podcasts and scroll down to this episode. And be sure to click the like and subscribe buttons in iTunes, Apple Podcasts, or wherever you download or listen to this podcast. Also, please click the share buttons to share this podcast with your friends and family. That way, you can help promote not only this podcast, but ethical and sustainable investing globally. So let's help create a better world with our investments. Contact me if you have any questions. Again, don't miss out on my terrific holiday offer for you. 50% off the price of the one-of-a-kind investor educational tutorial for all, my DIY ethical sustainable investing page tutorial. Temporarily reduced from $49.95 US to just $24.95 US. Go now to my site investingforthesoul.com/podcasts and click the link halfway down the right-hand column. Talk to you again on January 3rd. Wishing you a most wonderful, joyous and healthy holiday and Happy New Year. Bye for now. Thanks for listening. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY ethical sustainable investing page tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.